Here comes a pre-market summary for Wednesday, March 15th. Futures back in negative territory in a big way here this morning as we get a little bit more banking uncertainty coming through in the form of European banks this time. All throughout the European session, we've seen huge declines right across the entire sector, including from Credit Suisse. The Saudis coming out this morning and saying they're not going to provide Credit Suisse. Saudis are the largest backer of the bank. They're not going to provide CS with any more funding going forward. So all-time lows over in Europe right now for Credit Suisse. The ADR in New York also down significantly. We've seen halts all morning long throughout the financial sector throughout Europe as well. So banks on watch. Here's how the futures are shaping up right now. 1.7 downside for the S&P 500, about 1.5 there for the Dow. The NASDAQ 1.4 to the downside. TSX futures here in Toronto pointing to a sharply lower open as well, 2% right now. Crude down again today, 1.3%. Bitcoin chopping around, but it's going to be all about the banking group. That's UAL. Let's have a look at the overall market here. That's how things are shaping up for the S&P right now. Back to the upside again yesterday, but we are giving most of that and then some back again in the pre-market here in negative territory. There's the Qs for you. NASDAQ looking very similar, just this nice flag pattern forming on the daily chart. For the NASDAQ, FRC back in the headlines as well. The S&P credit rating comes out with a negative credit watch on FRC late in the day yesterday. They also said they will not place any of the other U.S. banks in their negative category. But FRC downside, as we saw late in the day yesterday, extending those declines here pre-market this morning. PACW, another one back to the downside this morning. As I mentioned, some of the bigger banks getting hit a little bit here as well, including JP down about 2-3% here in early trading. Goldman under pressure, BAC, Citigroup all under significant pressure. Charles Schwab bucking the trend, though. It's the only one. A little bit stronger than the rest, about break even here in pre-market trading. CEO comes out and says, don't worry, the bank has liquidity, not seeking a capital raise or any sort of deals. We saw how that worked out for SIVB last week. We'll see what happens with Charles Schwab going forward. Apple's main supplier, meanwhile, Foxconn, reporting earnings overnight. They reported a 10% decline year over year in profit, but said they are extending and continuing investments into markets outside of China. So we'll have a look at Apple shares. Big tech across the board has been a little bit stronger than the rest of the entire market this week, as we anticipate maybe not, well, smaller rate increases going forward, but maybe even a pause coming up here from the Fed shortly. Tesla back on watch as well. Officially Europe's top EV brand in Q4, topping Mercedes, and Boeing deliveries missing expectations in February. Their downside this morning, and this Oatly, OTLY, securing more funding, but also reported earnings that were a little bit better than expected. So a nice pop here for OTLY. Grab the watch list, guys. Use that QR code on screen right now. February PPI on deck coming up at 8:30 this morning. Yeah, more inflation data should set the tone, at least early on. We'll see you shortly on TraderTV.Live.